day 4 really essentially, and part 4, which is shorting tops with upper shadows, and also when not to short, overextended play. So we've seen those also recently, and find those short-lived shorts. So let's get into right now though, shorting tops and upper shadows. The main thing you're looking for when you're shorting tops and upper shadows, you're very rarely getting in right at the top, team. The main confirmation you're looking for, a lot of the time for a lot of traders, especially in the red candle, is the close of the red candle and the movement down. Now, we could have been up even in this one. Any green candle you see when the close happens, you usually, most times as you see a nice pullback in red candles down. So any upper shadow, right? When we have a red candle form beside, and the main thing is what you're looking for is the close of the green candle, red candle forming, right? So most traders are usually in at this candle below the opening of these candles, or I should say the close of those candles. See, the close is right here, the close is right there. Most traders are starting to get in here. Very few and far between are getting in that wick. Most are waiting for that move down. Like here is a little bit different story because it is red, as you can tell. So when we get into a red closing candle, I know a lot of traders, I don't use this so much, but I know a lot of traders, this is exactly what they're looking for, a red candle. And when it closes with a massive upper shadow, look at the pullback opportunity that we get. I mean, this dump back from this one. And those are the more opportune ones. Green ones will see many kind of pullbacks, right? We don't see the massive crazy pullbacks. It's usually the red upper candles, the upper shadow with the red candle. Those are the ones that see the bigger pullbacks and bigger returns, right? So you see in the end what happens right here, upper shadow, but the bigger one happens when we have a red, didn't mean to go down, but a red candle, right? Red candle forms, more pullback. The green candle forms, it's a good pullback, but it's not as massive as when we have the red candle form with the upper shadow. So that's what we're looking for. And also moving into the upper VWAP band, team. That's the other thing I kind of want to slowly briefly bring up. When you move exponentially, a good amount of distance, and these lines go from which not a lot of traders use these, so I'll letting you know when these come in. You may not have the upper VWAP bands, but we move so fast like into these upper VWAP bands. They're going to be micro pullbacks, right? Every time we move into them, we're going to see micro pullbacks. Thus, these upper shadows. Anytime you see an upper shadow with a green candle and it closes, look for the red candle to form, which would be when, as soon as you see it starts turning red, it's usually this is what you get. You get the pullback down. It's very hard to read these because you have to wait for it to turn red. A lot of time by they turn red, they may be, a lot of the shorts already happen. So the one you want to look for, team, and I'm telling you that are going to be more successful for you, upper shadow with a red candle. Every time you see an upper shadow with a red candle and it closes it, because it'll be an upper shadow, comes down, closes red, I'm telling you, team, you can just jump in. It closes down here, it opens right here. Look at this movement down. Now, no, you didn't get in, a good 20 cents of the move, but you're still getting a massive chunk of change of the move right there. That's what a lot of traders are using for their, and I'll get into a couple more examples in a minute. Here's back to Piton because I want to stay with Piton again. Look at that again, back to the whole shorting into tops. This is what Deck looks for. Now, I know this is exactly what this is Deck's strategy. So getting to another strategy that Deck uses is this right here. Now, I short this few and far between, but we see a top here. All these upper shadow tops right here. We do see a little bit of a movement above, but there's the most of the congestion ends up being where that top was, where we did see a beautiful, I didn't put the full pullback in, but there was a beautiful pullback right here from Peloton early on when this hit this upper area and we pulled back a good amount away. I think we maybe even came back close to the VWAP, if not to the VWAP. Again, what is it moving back to? Past chart history. That's what I usually mainly put these kind of shorting at the tops. We're looking at past chart history. Where have you moved to before and failed at, I'd say terribly or miserably, right? And so that are those little old resistance / sandwich areas. So whether it's a shelf that was built, the sandwich because the old resistance and now new support. And so every time we come up, or I should say old support and now new resistance. So every time we come up into it, kind of like this example right here, that shelf was built of resistance, or I should say support. So when we come back into it, it's going to be resistance. Now we come up for a third touch. We know those as what? Third touch breakout. So that's why I tell a lot of traders, kind of like earlier with AMC, there's certain trades you want to look for where you go, hey, it could be a good short, but I may let that spike up into another new high. There was already one good short right there, kind of like there was already one good bounce there. I don't want to try that bounce essentially again, or try that short there again. Let's see if it kind of spikes through there and I can get another short where at a higher area at all these other upper shadows. And so that's what we're looking for, especially Deck is a lot of the time, where immediately when he knows, when he sees these things spiking up, oh my gosh, new high of day, pulls up past chart history and just to see where this thing recently spiked to and then failed at, so he can then jump in at that same area, because he knows every trader, especially when we move up so, like I was going to say, too much too fast, or it's just moving up really fast, compared to sometimes what it is moving. So it's kind of slow, and then boom, just jolts up real quickly. Look for that to fly into resistance areas from past chart history, and watch for awesome massive upper shadows to be formed, especially right the green or the red one, I should say. Like you have the red one formed here, red upper shadow, and then it forms a red candle. You're jumping in at the close of that candle, and you're loving life. You can jump in anywhere at the, and there's more examples of what I'm talking about. So I'm very rarely, even when I'm trading these in at these upper shadows team, most times I'm in at the close of the red candle for the move back down. So, even if you had to wait through a little bit of this fluctuation, but say the close of this red candle right here, or anywhere the drop of this support area. So you can totally see this area right here ends up being the main resistance of 5.8. So anything under 5.8 would be fine for the short opportunity. If you want to be a safe trader, wait for the close. You're in at 565-ish area. Look where this still dumps back. It dumps back a full $1. That's the area we're looking for the red candle off these upper shadows. This was a red candle at the top, or I should say a green candle, I know, at the top. So where's maybe the safer one? Like, oh, it was a green candle. It's not as safe, I know. It could still pop up. I'm going to wait for that red candle to form. The true red one back down, right? And so this is the one, right? Because that's the red upper shadow. This was a green upper shadow. So this would have been the one to get into for the safer move up. Where to get in? The close of the candle. So you're in right here, and now you're once 100% below 5.8 with a red candle with an upper shadow. Look where the dump off truly ends up coming from, the red upper shadow. I don't know how many times I go back to all these clips and it just kept, now kind of going back and doing the trend line cracks and doing all the different shorting methods that I've kind of, I say perfected, but as much as I could, right? The technique, the strategy, the confirmation, what to look for. These old trades that I go back through and look at of where I did short and what I could have shorted at, and where other traders do, it's this red candle. The close of that red candle, opening, closing type thing, anywhere in between 565 and 560 is fine. This moves down to 460. It really hit below that with a lower shadow. Really, it goes down to 440. So that's amazing short opportunity. And it's always the red candle with the red upper shadow. Again, it's the same as this is all the way back to team. This is all the way back to forever ago. This is like these are my recaps I did all the way back in 2017 team. These are from forever ago. 2017. I've been doing recaps, for that long. This is when I started finally actually getting decent, was December of 2017. Reading these areas, putting support and resistance lines in, which this one I go back and I was like, I see it, but why don't I have more in here? I should have had another one here, probably another one right through there. That was before I knew sandwiches. See, boom, boom, and then boom, came back up to it and it failed. Here or there. It's just funny when you go back through and see how good you were then versus maybe how good you are now. It's just awesome to see the progression. Here again, where did I get in at? I got in, I didn't short back then. Of course I was going long, but I just went back and looked at anything that I knew spiked. And I knew 2017 in December was a lot of spiking in one of my first recaps, and this stuff was going bananas. And I just found the first few. I didn't have to go that. I just found a couple to add to this of where I'm getting in, if I would get in now, on upper shadow basis, and where a lot of traders get in on the upper shadow basis. So we get the green candle, but when we get the red candle, right, we're looking for the red candle with an upper shadow, not the green one. So as soon as we see the red one, everyone's got to be going, yes, the red one, here it comes, and it starts coming on down. And now we're below the open of this candle. The main area for me to get into, if I look at now, would probably be below 320. Anything below 320 open and closing candles, we're rocketeering on down. And I say rocketeering on down, but it's going to be a good short. And if anything, opening and closing candles off the red candle. Now, every one of these I pulled up. Every one of them, team. I could have kept going. Every one of them with a red candle with an upper shadow, you're good for a short. Get in at the close and the open, or the close and open of the candles. That closing of that candle. If you want to be safe, like, okay, I know it closed, it's red. AK said, a high percentage of the time when you get that upper shadow and it's a red candle, it's money. It's gonna be a great short opportunity. And so I'm telling you, if you want to be a safe trader, that's fine. Wait for the confirmation. Me, I'm going to go with that whole point of no return. I'm going to see the upper shadow forming. Okay, because it opened. You can see this is where, because we know red candles, they open up here. Opened up here, and it's all the way down here in the 330s, and it's cracking below the upper shadow. So I probably wouldn't have gotten in at 320. I probably would have started to pull the trigger somewhere in here, depending on where the time frame was, right? Because it jolted down. This is when stocks were rangy and moving at the opening bell. A lot of volume, a lot of up and down movement. But again, that's where a lot of the time, I know both of these were at the opening bell, so a lot of us don't trade at the opening bell, but they're great examples of what we're looking for, and exactly is that. It's the upper shadow with the red candle. The close and opening of that candle, that's your confirmation. You're good to go. Look at the short. Those are two in a row. I could have kept going on. The red candle with the red upper shadow, obviously because it's a red candle. Woo! Those are money, team. Those are money shorts at the top. You want to get in upper shadows at the top? Fine. Make sure it's a red candle with an upper shadow. You are guaranteed that thing to dump on down to good support areas 100% of the time. You know, lockup zone for me, number 1 would have been 280. Lockup zone number 2 would have been for me somewhere around the close to the 265-ish area, 270 area. Under that, there's really nothing holding it up. This didn't even hold it up that much. It tried to at the 350 or 250 mark, and it dumped off hard from there. So, you know, and that would have been the other area, you know, nowadays to look at. You know, my shelf, that could have been like just going back to shelf. This kind of a little shelf here, right around that 275, 280 area. So under, I said, you know, it depends on where you're looking at. There's a little bit at 280, some at 270-ish. And then crack of that, you know, the crack of 250. If I go back even further, you should have seen the shelf that was built of resistance from before. So I should say support from before, and then resistance. And then so that's what we know. When we move back above it, when we come back to that area, if we crack below it, it's gonna be a great short opportunity. So this is kind of a combo here of, you know, if you're looking at the tops, you want a red candle, team. You want a red candle with a red upper shadow, just like this one right here. You know, look at the beautiful short from this candle on down. You know, I can go back to this candle on down, right? You know, anything with a red candle with an upper shadow, that's what you're looking for the short opportunity. That's when you're going to get and bank. All right, short-lived shorts. Let's get into this real quick. What we're also seeing recently, team, because I want traders to be careful of this and not get squeezed on, because recently we're seeing what? And when the market does get warmer, those plays that go up and up and up and up and up and up and up, those are usually in the end, they're more like short-lived shorts. They're not long-lived, and they're not just going to crack away and crack away and crack away. They're very short-lived at times. So let's go in through NVCT. I already went over the first one earlier. I went over it right here. If you do remember, team, the shelf that was built early on in the morning, the beautiful shelf right here at $5 was a beautiful crack. $5 shelf that was built, BEA beautiful the other day, the shelf crack from $5.50. Now on down to where, no, the $5, I should say $5 area down to $4.50. That was a good crack, good short opportunity. Got to be locking it up at the lower VWAP band. Kind of already went over that one with the shelf shorts earlier. Now from there, where to short it? The next area up, we're going to get to this area right here. This area right here. So there you go. There's that nice what? Super over. Look at that in the 1 minute time frame when you're zoomed out. That is overextended as all get out. If that's a Southern saying I've never heard, or, you know, if that's a Southern saying, that is one for sure. But that is literally overextended as all get out, team. So even when you zoom in and you see a trend line this steep, you better look for a short. Now, again, in the time frame we're in with the stocks, or at least the stocks we're looking at, I know we want to short them back down. Oh, trend line crack. Okay, this is definitely super overextended. It's up to 780 now. This is going to dump over, you know, it's over the up over the upper VWAP band. This is going to be a great short. And it is a great short of the trend line crack. You know, we closed outside, and actually this is one of the very few and far between where I see a green candle on the close outside. But we close and open outside. Here's your confirmation to get in right here at 742-ish or whatever it is. But the opening, as soon as this candle, I should say opens, this one closed, and as soon as this one opens, right, that's our confirmation. Boom. We were right on down with the we'll call it 740 entry. We were... Well, that's 50-cent trade. I mean, we were instantly down to 690, right, team? Essentially, we were down to 690 just like that in a blink of an eye. You got to be locking some up right there. You're up 50 cents on a short, you got to lock some up. And then when you start seeing these returns back up and it's not fully cracking, I don't know how long traders hold for, but I know some traders do hold for a lot longer than I do. I would have most likely been out somewhere, you know, I probably would not have waited this long. In all honestly truth, I would have been out in these candles right through here. You know, it's trying to come back up. I can see it's maybe trying to U-shape. Anywhere below 7, I would have tried to take most of my shares, 100%. That's just me. I'm up 50+%. Well, a decent percent, but 50 cents on a trade in a matter of 3, 4, 5 minutes. So in 2, 3, 4, 5 minutes, say 1,000 shares, I'm up $500, right? I'm taking that 100 times. I'm taking 100% of the time. I'm taking that. And so I'm not waiting for this to maybe dump off some more, especially when you start seeing this team. This is when you need to start going, oh, okay, if we don't crack 680 soon, and then we start cracking it, and then you, again, those were probably where a lot of traders, and I know I've been in your shoes kind of a couple times, although I was more of the scared trader, so I've talked to a lot of traders in your shoes that just keep holding, oh, it's going to dump, and then doesn't dump, and then squeezes on them, and then it's halted up at $8. And you're going, no, right? We've been there. That's not what we want. So that's why we want to lock up shares in some of these plays when they don't continue to crack off. We don't want to be in plays for 30, 40, 50 minutes, an hour that aren't cracking. They're most likely not going to. If they do, they're going to be a slow and steady crack. So if you don't see your profit return in 10, 15, 20 minutes after a play does this, take your profits, and run. Because you're going to find out the whole even and leaving, talking about that earlier. That's why you want to take and lock up your, your profit, or like the whole even and leaving thing. You get on a trade and you're way down. It comes back to your entry. Just lock it up, because if you don't get back to the and call it even, it's probably leaving again, and then you're gonna be down a lot of money again. You had your one chance to lock up and call it a kind of an even trade, and you didn't, and now it's back and it's leaving you. And so same kind of thought process, really here, in my opinion, when you see these runners starting to move in, and you'll really be able to say when the stock market gets hotter as it's getting there, team. Even this trendline crack, which was in the end at most, team, was at most close to almost 80 cents of a crack. If somehow the spread, you got perfect part on each spread, you got in at 442 or 742 and got out at 662, or whatever. So it was a perfect 80-cent trade. Very few traders did and got that. It was most likely, for the most part, probably a 40 to 30, 50 at most cent trade for most traders. So, know why? Because what we've seen, go back to the trade itself, right? It's just been moving. Let's go back. I'm sorry. It's been moving. We've seen this where, yes, we have shorts that are had, but they're about 50 cents. Let me show you another one. These, about 50 cents until we get the full crack off. But here again, another overextended trend line toward the top of the hill. Look what we get though, team, and you could have been up a little bit higher. Red candle with an upper shadow. Look how it dumps on down. I'm telling you, I'll get a little country song going for this one. Red candle with the red upper shadow. That's what the song's going to be called. Look how she dumps on down. I mean, I'm telling you, team, every time you see, not every time, but a lot of the time you see a red candle with a red upper shadow, just jump, as soon as it closes, just jump in. It's like, this thing's dumping soon. It may not be dumping right now, somehow right off the bat, this thing's about to dump. Let's get into it with the trend line crack, though. So we got at the trend line crack. We're in, it's a 940-ish area. Boom, there goes that big dump. About a 50-cent trade. It goes down to 860 area. So, well, actually, my bad. That in the end was probably about a 930-ish down to 9. So that probably was about a 70-ish cent trade because of this massive, candle. Then in the end, we get a little bit bigger crack if we held long enough, which I'm sure a lot of traders probably saw this coming back up and would have been out of their short. But again, where do we get another crack in about 50 cents or more or so? Was right here. If we dump back through that area, which again, not many traders had probably the wherewithal to do shorting it, right? For the most part. But any pullbacks we see are very short-lived. The better ones to me would be the trendline crack down. That's the safer one. That's safe. That's easy to see. Got a good short out of it. Of course, the red candle I've been talking about. And then here, the great shelf that's built. So we have a great, beautiful shelf. Boom, but especially later on, as you can really tell, right at $9. I went a little bit lower, kind of with those lower shadows there the other day, if you remember that. Could have probably went a tad lower, especially when this was formed. I think it was formed same dot as this one was. I think it was like 892. They both hit on the dot. So we know under 892, what are we going to get? We're going to get a nice, good dump and sell off. So under 892, you're in. Boom. Even if you got into open and closing in candles, you're in at 860. Boom, you're locking some up in 820s, 810s, somewhere in that range. So those to me, those are the better, the safer ones. There are some other shorts in here. Well, of course, this was part of the trend line crack, but this move or that move, or they're short-lived. So if you're in shorts, team, if they're moving up like this, and I'll be trying to kind of yell out you in chat. Here's another one too that I could just sit here and try to break down. CFVI, where the trend line crack was up top. Trend line crack, came down from say that and the VWAP crack down to here, right? So a good, maybe, I can't tell what's that about, only about 25 cents or so, 25 to maybe 50 cents from the trend line crack. Another trend line crack right here, right? So trend line crack right through here, maybe 50 cents or so. They're very short-lived. Here's a super overextended move. So maybe if you would have got in somewhere toward that crazy upper trend crack, another decent short, right? But every time we put these trend lines in, they're cracked, but they're back up. They're cracked, but they're back up. Here's an overextended trend line. It cracks here. Boom, boom, boom. You're in somewhere in here. It's short-lived. But then it's right back up again. It isn't toward the end of the day, team, with most of these plays that move all day long. And then we're going to see some that continue right through here. And there's still, that's what I was like, remember me saying the other day, CFE, I was like, oh, CFEI would be so nice if this was testing high of day right now. Look how much this sold off at the end of the day. So that's where you can then maybe get some shorts in. But early on, be careful as we move toward a hotter time period. We will see shorts. But when we get these elongated, long, moving up all day plays, and they don't have to move that much. I mean, this only moved $5 in the day. This isn't like it moved a ton. But if we get these movers that kind of move and move and move, you've got to realize, I'm telling you, team, move away from the shorts early on. You can go back to them later on in the day. So when we finally get the dump off, but we would have to move toward more on the long side here. Shorts are short-lived. Longs are a little bit more, as you can tell, is more bullish and taking control here. Shorts are short-lived on plays like this right here, right? Shorts are short-lived. There are times to have them, boom, boom, here's another trend line, boom, and here's another good one and on down. But for the most part, it's movement up. You're getting squeezed on. Peloton was another one the other day. Everyone was shorting Peloton. Almost put that example in there on the short-lived shorts. Peloton kept doing the same thing, right? And squeezing shorts out. Shorts are very short-lived until it got at the very top of its move, and you have to wait for that move to get to find it, to get to the very top. So hopefully that helps you out. Day 3 there, day 4 wrapped up, but that is the short selling boot camp from AK-47. Day 1 and day 2, those were my strategies. Into day 3 right here, of course, at the beginning of it, was shorting my shelves. I love these shelves right here, team. I've been talking about them all the time. These shelves are money. Shorting trend line cracks, areas of support. It runs back up into sandwich areas. Like, let's go to Peloton right here. Where was Peloton? Where was it? Right here. Right here, Peloton, plays real far down, runs back up sharply, real fast into what was old support will be now resistance, or what was another good one. Pin was the other day, kind of did that a couple times right here. But then again, when it got above it, what do? We crack below that shelf. That was one support, then was resistance like it was, and then becomes support again. And so when you get back above it and support again, what we know is once resistance, support, so blah, blah, blah. So now support again, it's going to be a great short opportunity. So use those shelves. And of course, into day 3 and day 4, kind of what Deck does, what a lot of other traders use as well. Shorting tops, finding these upper shadows. That's what a lot of, so you're kind of end up a little bit higher in some of these plays. That's what I kind of did in day 3 and day 4. So hopefully that helps you out with your shorting game.